It's actually interesting because AI has been the hot topic for a number of years now across all different industries and including our own industry in financial crime and compliance. But really, the interest in AI has mainly been general curiosity rather than genuine interest from banks. However, over the past 12 to 18 months, I would say, I've seen definitely a significant shift from that. And I think now banks are beginning to really seriously consider adopting AI as part of their systems. And I think there's probably a number of reasons for this. The first being that regulators first have given the green light to essentially explore different techniques, more adaptive techniques, especially with the introduction of the EU AI Act. It's kind of created a framework that banks can follow, that they can feel confident adopting AI. Secondly, automation isn't really a luxury anymore. It's more of a necessity. I think with the rising volume of transactions, adopting less sophisticated techniques have resulted in higher alert rates, higher false positives, and this is no longer sustainable. So the need for automation is higher than ever. And the last point, and it's mainly kind of personal opinion, I think the rise of technologies like ChatGPT has had this subconscious effect on how people perceive AI. So now, although AI is available everywhere, it is basically very easily accessible and everyone can interact with it directly. And because of that, people are really starting to see the value of AI and want to see how they can incorporate it into their own workflows. If you think about what financial crime is and compliance in general, it's really all about understanding behavior. You're trying to understand how someone within a bank or how someone transacts, how they behave within the banking system. So you are essentially looking to understand behavior. And behavior is very dynamic, it's evolving, and it really differs from person to person. So if you're a student, you will behave differently from someone who is maybe owner of a company. And if you are a company itself, you will be different if you're a small company versus a big company. And so those differences, if you were to use more static rules to monitor their behavior, you're essentially casting a very wide net on a very dynamic environment. And this is a recipe for very high false positive rates. And so what you need is a system that can adapt to data. And the best tool we have to do that is essentially machine learning and AI in general. Yeah, so when we talk about machine learning, it's typically two types of machine learning. Typically, you have supervised and unsupervised machine learning. So supervised means you are teaching the AI on how to behave, right? So supervised means you are supervising its learning process. You're giving it examples that it needs to use so it learns what factors lead to the outcome that you give it. So in our domain, if we're talking about, let's say, fraud detection, you're giving it examples of fraud and examples of not fraud. And you are letting the AI learn what leads to fraud and what doesn't. So this is very useful. However, the challenge is that crime is, although we hear about it quite a lot, it's quite rare in the grand scheme of things. So a very small percentage of transactions and behavior are actually criminal behavior. And so machine learning algorithms need bigger data sets to learn properly. And so this is why you have a different branch of machine learning that you can rely on to help you with that. And that's unsupervised learning. And unsupervised learning, You're not giving it examples to learn from. Instead, you are allowing the AI to find patterns within the data you're giving it. And from those patterns, you can identify anomalies or abnormalities. So anything that's outside the pattern, you can consider as unusual. And so when you combine those different frameworks together, you have a more robust way of catching suspicious behavior. So you have the supervised model, which helps you catch cases that you've seen before. And you have the unsupervised that can help you flag abnormalities that might occur. Yeah, I think there's this misconception that because now there's AI that we need to completely eradicate what's been working moderately well, let's say, which is rules. But that's not the case. So rules are very effective if you have clear cases or clear scenarios that you want to monitor. And so typically regulators might have certain events that want to be investigated no matter what happens, right? So maybe a transaction from a suspicious country makes a large payment. You want to stop this. Now, you don't need to use a machine learning algorithm to do this. Rules are perfectly fit to handle those cases. Where you want to use AI is when you're dealing with something dynamic, right? And the way we do it at Eastnets, we look at two key areas that are the main pain points or the main things that banks typically talk about. One is false positive reduction, and the other is improving the quality of alerts that they generate. And these are actually two different problems that require two different types of machine learning solutions or AI in general. One is using AI for optimization purposes. Because when you talk about false positives, you're typically talking about a rule-based system that's generating alerts in an inaccurate way. So you can use AI as a layer of intelligence to help you minimize the false positives generated by those rules. On the flip side, if you have reduced your false positives from rules, you can then start to think about using AI to generate higher quality alerts and mainly alerts that are good indicators of something criminal happening. So money laundering, fraud, sanctioned entity being flagged. And this is where we can use things like supervised and unsupervised models to help alert us when something abnormal has occurred. Yeah, it is a big change, but it doesn't have to be that big of a change. So you don't have to do wholesale changes all at once. And what we recommend at Eastnets all the time is to do things in stages, mainly because we want to make sure we build trust between the bank and the AI so that they feel that they can rely on the AI. What we don't want is to just throw a new system at the bank and just hope they use it all the time. So what we do is we take things in a gradual manner, starting with what we call a pre-deployment analysis phase, or like a proof of concept, where essentially we gather the data from the bank and we simulate our AI models on their data just to give the bank a glimpse of what the AI can do. How is it going to behave on their data? And from there, they can start to see the value immediately, and they know what to expect when the AI is actually enabled in production. When this happens, the bank can then sign off on that AI being in production. But even then, you don't have to have it make decisions or make actions that could be considered risky. So you can deploy your AI as an advisor first. So the AI would essentially recommend a decision. So when an alert is generated, you can just look on the UI, you can see the suggestion made by the AI and use that as a supportive tool to help you make a decision more accurately. What we want is that with time, you build this confidence with how the AI is actually acting, right? So if the AI is constantly making decisions that are similar to how you are thinking as a human, then with time you can then configure it to automate more of the tasks that you're making as an investigator. And gradually you can automate more and more depending on how the AI is performing. So you don't necessarily need to do everything all at once. You can take things step by step. Yeah, it's a good question because I really see two key areas evolving. One is for AI in general, and one is more specific to financial crime. So the first being more holistic AI monitoring. So typically when we talk about financial crime, things seem to be discussed in silos. So you have your AML system, you have your fraud system, you have your sanction screening system. However, all of these are indicators of risk. So every area of financial crime is a dimension of risk for a particular entity, like a person or a company. And so the way we're seeing things evolve is banks are now looking to combine all this information in a kind of a 360-degree view of risk. So looking at fraud, AML, all together, all the factors that might be suspicious across both before making a final decision. Because money laundering, if you think about it, a precursor to it could be fraud. So fraud occurs and then they want to launder that dirty money and integrate it into the system. And so if you have some information about maybe potential fraud that have occurred in the past, that helps you make better judgment for more money laundering investigation purposes. And the second area, which is quite interesting topic these days, which is agentic AI. So people use ChatGPT and technology like that every day, but what they don't realize is that the key power of it is its reasoning abilities. And so if you stop thinking about it in terms of content generation tools and start leveraging that intelligence that it has inherently, you can use it for very powerful purposes. And in particular, for our use case, if you take that reasoning ability and you essentially train the model to behave like a financial crime investigator, you can then automate way more than you can using more traditional algorithms like machine learning and even rules. And if you combine all of them together, then you've taken things to a whole new level. Especially given that agentic AI allows you to integrate with all of your systems. So you can have it automatically retrieve information from the database to help you with your investigation. It can write up drafts for your SAR reports and do a bunch of tasks that you would have otherwise had to do manually. Yeah, I think banks are on the right track in terms of their willingness to learn more about AI and how to embrace it. And I think the biggest misconception I see is that AI is touted as this black box model, whereas over the past few years, there's been a lot of development in research and in more a practical sense in terms of making AI a lot more explainable. And so I think particularly at Eastnets, we try to make sure that we reveal the factors behind every AI decision made, but also supplement it with analytics. Because if you can show the bank and the investigators the historical data that the AI is feeding off of, then you have a much more complete view of how the AI is actually behaving. And that can be a kind of a super tool to help you with your investigation process. And really, AI is not there to replace any humans per se. Like they say, AI is not, AI won't replace humans. Humans that use AI will replace humans, right? So it's about using the best tools you have to do the task more effectively.